Hi, my name is Melanie Hyer with RevestGroup at Keller Williams Realty in Miami Beach, Florida. I'm here with you today to talk about the local real estate market in Miami Beach and in Miami-Dade County. So first I want to go over what's been going on for the first half of 2010. So I'm going to ask you to look at this graph, which kind of will show you over the past 2 years, we have been consistently declining in inventory. The light green represents properties for sale, which would be our inventory in Miami-Dade County. And as you see, from 2008 to currently in 2010, we have decreased inventory substantially. And the dark green line shows the sales that have been happening, and that has been increasing. So that's for the past 2 years. Now I'm going to bring in another graph which shows the inventory. So in 2008 we had 35 months of inventory, and currently in 2010 we have about 15 months of inventory. Inventory is basically calculated by the amount of properties on the market divided by the amount of sales that we're having. So this is a very good sign to show that our market is returning to a stabilized, normal market. Now I want to go over, now that I've kind of given you a big picture of what's been going on, I'm going to talk about these past 6 months. So what's been going on in Miami-Dade County in the past 6 months is that on this graph you can see that since January, in January, our average price per square foot was approximately $160 per square foot for the county. That has gone up to $191 per square foot in June, which means it's a average price per square foot increase of over 19% since January. So this is great news. I'm going to ask you to look at this graph, which will show the average days on the market. So it means that if you have a property that has sold this year, approximately it was on the market for about three months, in between 3 and 4 months, and properties are selling at about 90% of what they are listed for. Go back to me. So if a property is listed for $300,000 and it's selling at 90%, it would sell at about $270,000. So the gap is coming together on the asking price and the selling price, which is also indicating that we're having a stabilized market. Countywide, we are having, in the beginning of the year we had 16 months of inventory, and we are decreasing, and currently we have 12 months of inventory. So this is for countywide, for Miami-Dade County. If you have over 12 months of inventory, it is considered to be a buyer's market. If you have 6 to 12 months, it's considered to be a stable, normal market. And if you have under 6 months of inventory, it's considered to be a seller's market. So sitting at about 12 months of inventory, we're now at a normal, stable market. So what's the big hype down here in Florida? What is everybody talking about? Everybody's talking about foreclosures. So I want to let you guys know what's the truth about what's going on with foreclosures down in Miami-Dade County. So I'm going to have you look at this graph. This graph starts from 2009, because before 2009 you'll see there's nothing. That's because we weren't even tracking foreclosures in South Florida. It's been a new market for us, and it's been going on for the past year and a half rather strong. As you see, the light green is the inventory. So we had a lot of inventory of foreclosures, and when I say a lot, it was actually only about 3,000 at the height, which if you think about our entire market, we have about 30,000 properties on the market, so it's only really 10% of our market. So the foreclosure market, even though it's a market we're talking the most about, it's actually not the area. There's more properties for sale in the normal market than in the foreclosure market. And when the properties come on the market in the foreclosure market, they come on and off the market very quickly. The properties, the average days on a market for a foreclosure property is about 35 days. And remember, I told you that the average days on the market for a regular property is about 90 days. So the foreclosures sell in about 1/3 the amount of time. Many times there's bidding wars on the foreclosure properties, and as you can see, the inventories had sharply decreased, and starting in the beginning of the year, this is January of 2010, we had a very low inventory of foreclosure properties, and then it's been slowly increasing. So right now we have about 2,000 properties that are foreclosures in Miami-Dade County, and we're selling about 1,000 a month. So it's a very small inventory, and we expect the foreclosure inventory to be rising because the banks are starting to release the foreclosure properties into the market again, and so it will be a great market for investors to be buying properties over the next couple years. I even am buying properties because it's just such a great deal. Another graph I want to show you, if you are considering buying foreclosure properties, something to know is you see this blue line here, it hovers at about 100%. So, you know, it was at about starting in the 2010 over here, it's about 100%. And what that line is it's the sold price compared to the list price, the percentage. And so foreclosures, on average, sell at about 100% of the list price. So when you see a foreclosure property and you see the asking price, don't think that you're going to get a big discount from that price. It's probably going to sell at or above the asking price, because these properties are already deeply discounted, and the people that are bidding on them, you know, they're investors and they know what a good deal it is. So if there's a foreclosure property you're interested in, make sure that you make a good bid on it, because it's already a discounted price. So now I've talked a little bit about what's going on in the overall market, and now I'm going to focus on Miami Beach. What's going on in the Miami Beach condos? Miami Beach, the average price per square foot starting in January was $330,000, and now it has increased, and it's gone up to $458,000. And so basically, this is showing an increase since the beginning of the year. So what does that show? Is that saying that prices in Miami Beach have gone up so dramatically in the past 6 months? No. What it means is that the luxury market is starting to sell again. So whereas a lot of people were buying the lower end condos, and that's why the prices were so low, now people are starting to buy the high end again. And so that's bringing our average price per square foot up to a higher level. This is showing that, again, in Miami Beach, the market is starting to stabilize and buyers are coming back to the market. This is a very interesting graph that I'm going to show you. The green line represents properties that are for sale. This is from the beginning of the year, from January to June. And the red line shows properties that have sold. So starting in January, going up to June, which is what I told you, in the 300s up to the average prices in the 500s. The interesting thing is these two lines are coming together, which shows that when those two numbers meet, we have a stabilized market. When properties have such a disparity like this, it shows that the market still needs adjustment. And when the properties are very close like that, it shows a stabilized market. So some of the conclusions that we can draw from all of the data that we've seen today is that the Miami Beach and Miami-Dade County markets are stabilizing, are healthy, and are on the road to recovery. This has been the RevestGroup market update for July 2010. We look forward for you to tune in to our next market update. Once again, my name is Melanie Hyer, and thank you for watching.